Hey everyone, welcome back to Finance First with Ali, the only place where finance meet fun, sarcasm, and sometimes coffee spills. Today we are diving into the world of penny stocks. You know those lottery tickets of the stock markets that everyone thinks will turn them into a Warren Buffett overnight? Spoiler alert, that's not how it works. But don't worry, I'm here to show you how to pick up penny stocks that actually have the potential to turn into multi-baggers. And yes, we will be using ticker tape. So grab your popcorn or better yet a notebook and let's get started. So the first segment is what are penny stocks? First, let's get one thing straight. What are penny stocks? They are stocks of small companies typically priced below rupees 50. These companies are usually under the radar, making them risky but potentially rewarding. Think of them as the underdogs of the stock market, like that one student in school who barely passed but later became a billionaire. But don't get too excited. Most penny stocks don't hit it big. That's why today we will learn how to separate diamonds from the coal. The second segment is the golden rule of penny stock investment. Before we go further, here's the golden rule. Only invest a small portion of your total portfolio in penny stocks, no more than 5 to 10%. Why? Because penny stocks are like spicy food, a little add flavors, but too much and you are running for water. Stick to a diversified portfolio for the rest, blue chip stocks, mutual funds, and other stable options. Penny stocks will be your dessert, not the main course. The third segment is research process using ticker tape. Now let's get into the fun part using ticker tape to research penny stocks. It's like being Sherlock Holmes but for the stock market. The first step is screening for penny stock. Open ticker tape and head to the stock screener section. Set the price filter to 50 or lower and market cap to small cap, and boom, here we go. We have got our list of penny stocks, but wait, don't start buying yet. We have got more deductive work to do. Add one more filter, that is debt to equity ratio. A good penny stock has low debt. Aim for debt to equity ratio below 1. For this, go to add filter section. Debt to equity 1%. Radico Khaitan Limited, Gillette India Limited, Global Health Limited. Open one of the company first. We are opening this Radico Khaitan Limited. So the second step over here is analyzing fundamentals. The first, look for profit margin. Check if company has consistent profit growth. If the profit graph looks like a roller coaster run. For this, go to the financial segment, and profit means net income. After giving the tax and all of the companies, what remains is known as the net income or the profit. That it is 277, 263. All these numbers are in crores. 220, 262, 287. That shows that the company's profit is constantly growing. That's a good sign. The second factor which we are going to look is promoter holding. High promoter holding is a green flag. Low holding means even the owners aren't confident in their business, which you wouldn't prefer. So for this, go to the holding segment and see the promoter holding. Total promoter holding in last 6 months, promoter holding in the company has almost stayed constant. That's a green flag. That shows that the company's owner or promoter have confidence in their stock. Step 3 is use ticker tape financial tab to check revenue growth over the last 5 years. Slow and steady wins the race. Here, look for consistent growth, not wild spikes. And remember, if you see the numbers that look too good to be true, they probably are. Don't fall for miracle stock. This is finance, not Harvard's. The fourth segment is red flags to avoid. Let's talk about the red flags. Akka, what to avoid? Like you avoid this random, hey bro, invest here WhatsApp messages. The first is low liquidity. If a stock has low trading volume, it means you might struggle to sell it later. The second is pump and dump scheme. If a stock price shoots up like a rocket for no reason, it's probably a scam. Third is negative news. Use the news tab on the ticker tip to check for controversies or legal issues. Trust me, you don't want your money tied to a sinking ship. The fifth segment is real life example. Let's look at a real life example to this all together. Search for a penny stock on ticker tape, let's say XYZ Limited. Apply the filters we discussed: debt to equity, promoter holding, profit growth, and revenue consistency. See how it stacks up. If it passes all the tests, congratulations. You have found a potential multi-bagger. But remember, even the best looking penny stock is still a risk, so invest cautiously. Sixth segment is portfolio allocation and final tips. Here's how to allocate your penny stock investment. 80% of your portfolio, stable investments like mutual funds, blue chip stocks, and bonds. 10 to 15% growth stocks, mid caps or large cap. 5 to 10% maximum penny stocks. Treat them as a high risk, high reward option. And here's the most important tip: do your research and don't invest money you can't afford to lose. Penny stocks are risky, but with the right strategy, they can add some spice to your portfolio. So that's it for today's video, folks. I hope you now feel more confident about diving into the world of penny stock. Remember, the stock market is a marathon, not a sprint. So start slow, stay consistent, and always do your homework. If you found this tutorial helpful, smash that like button, hit subscribe, and share this video with your friends who think investing is a rocket science. And hey, drop a comment below. What's the first penny stock you're planning to research? Until next time, keep investing smart and stay financially fearless. See you in the next video.